Some of our favorite stocks are down big today. I'm gonna go over where the markets may be headed next week, and I'm going to go over HIMS, Palantir, SoFi, and Robinhood. Three of those stocks were down pretty big today on some interesting news. I'm gonna tell you what I'm going to be doing with those stocks in my portfolio going forward. But remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if you take a look at the portfolio here, you can see that we're near all-time highs in the portfolio. And if you do want to see me hit my 8-figure goal and follow along that journey, be sure to be subscribed by clicking the subscribe button down below. And if you get any value out of this video, I would greatly appreciate if you just hit that thumbs up button. Thank you so much for being here. So let's go ahead and jump into it. Realized gain loss for the day. We closed out some Robinhood puts, and I'll talk about why I did that. But we took a nice $2,943 profit. Obviously, results vary day to day and month to month, depending on account size and risk tolerance, but I'm not the only one doing it. As you can see here in my private mastermind, Options Trading University, we have 415 clients now, all sharing their inspiration. Here, as you can see, clients sharing their inspiration. And this obviously depends on risk tolerance and account size, but it's great to see clients sharing this for the group. So if you do want access to my Ryan's Trades channel and my leaps, entries, and exits, that'll be at the top of the description. I also do give away free trade ideas on my Instagram and my free newsletter, which are both down below in the description. So be sure to be subscribed because they're both free. So let's go ahead and dive into it. If we take a look at the CME FedWatch tool, which basically is the futures for interest rate cuts, we want to be seeing these cuts coming through sooner than later. The economy is pretty strong, but the jobs market has been pretty weak. The ADP employment report, payroll report on Wednesday came in pretty bad, and that shows that, hey, not many people are out there getting jobs. So we do need to see these rate cuts coming, and as you can see, in October, we are 94% getting that quarter basis point rate cut, and another one potentially in December. So 2 confirmed for this year, and then another one in March or April. So that'll be kind of the next round of rate cuts in 2026. So if we look at the market, okay, QQQ broke out above the 603 level in the past 2 days, and we're just kind of sitting here. Now, if we break down below on Monday, we probably could be headed a little bit lower, maybe to 594, to the mid Bollinger Band area, or all the way down to this trend line here at 581, okay? So I'm really looking at those levels as dip buying opportunities. But again, if we don't break below and we kind of stay above this 603, I expect that we're probably gonna head up to 620, especially with the VIX being at 1664, okay? So the VIX is the Fear and Volatility Index. If you've never heard of this, this is exactly what I look at every single day to make sure that I know how much cash I need to have in my portfolio. So if we take a look at the VIX cash allocation levels, we could see that we're somewhere between VIX 15 and 20. So there's still slight fear in the market. So we're not at that greedy, crazy stage yet. I know it's crazy to see that when the market's at all-time highs, right? But we haven't quite hit that, everyone's kind of greedy and the market just keeps going up. We're definitely at a consolidation phase, and we could see that because there's definitely some good stocks that got hit today. So for me right now, according to VIX, I should be 20% cash to 25% cash. I'm actually about 15% because I'm very bullish in this stage right here. If we could be consistently consolidating here in the markets, I think we're gonna be kind of primed for that next leg up, 620 on QQQ. So that's what I'm watching out for. Now let's dive into the very first stock I wanna talk about. Okay, the very first one is HIMS. So some big news came out. Nader Kabani, who was previously at Amazon, who worked on the Amazon Pharmacy and Amazon Health products, he actually got moved to a different position. So now he's just taking an advisory role to help HIMS and HERS Health expand their global initiative. So it's actually a positive thing for the stock because now he can focus on future initiatives and really help help the company grow in the future. And then they appointed Mike Chi, who is already working there for 5 years, to the COO role. Now, at first I was a little bit worried about this. I said, you know what, let's go ahead and check to see if, Nader Kabani, if he's like selling shares, if he's just kind of leaving the company, or is he really taking this advisory role? So if you go to basically the insider trading, you could see that he has not sold any shares. all right? And he probably has a lot as he was COO of the company. So I don't see any shares being sold in the past month or two. So that's kind of good. I was just kind of looking over this list. Now, HIMS definitely took a hit today, okay? Down 9%. So out of the, all the stocks in my portfolio, this was kind of the bigger one today that took a hit. Now, we did breach this mid Bollinger Band here. And I think potentially it could get as low as 47. We've seen HIMS kind of fall off a cliff and then kind of rally back up. So right now I think is a good opportunity to start selling cash secured puts. And that's exactly what I would do. We're basically heading towards oversold on the RSI, a nice little bearish crossover. So we could see a couple more days of this next week, which would be good opportunities for cash secured puts, which I feel are the safest for me, and leaps options. So let's go ahead and dive into the portfolio and I'll show you exactly what I'm doing. Now remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if we take a look at the portfolio, you can see that I have 120K in cash secured puts. So I put my money on the line because I believe in HIMS long term. I think this is definitely a triple digit stock. It will be above 100 in my opinion. So if we go to the HIMS position, you can see that I have 24 cash secured puts at the 50 strike to collect about $5,200. Now, if I had to enter a new option today, I would go right at that 47 level. So I'd probably go out to November 31st because I think earnings are either the week of November 7th or November 14th. So I don't want to play earnings right now. I'd just go out to the end of October. And if I went to that 47 strike, I'd pick up $259 or a potential ROI of 6%. Now, remember, results vary based off where the stock is at. And if the stock does go below 47, I'd be forced to buy 100 shares at $47. But if we go back to the chart, okay, we're going to go back to the chart right here. You could see that 47 is right at that lower Bollinger Band, and that's basically where I'd be trying to catch the stock, okay? Now, I'm at the 50 level, and I'm totally fine getting assigned there because relative to previous all-time highs, okay, that's about a almost 30% discount on the stock. So for me, I'm totally fine there because there's so much premium on the covered call side that at least if I do get assigned, I could collect monthly premiums by selling some covered calls against my shares. So 50 is great, but 47 is safer, and I would be collecting 6% potential ROI. So I like HIMS there. And this was, while it was kind of a little bit shocking news at first, and I'm sure that's kind of how investors were reacting because they were like, oh my gosh, is Nader Kabani, is he like ditching the company, or is he really going to be an advisor to the company? And it looks like he is. So that's a good thing. And HIMS long-term has been very, very profitable for me, and it's been fun to trade this volatility. So I really like HIMS, but let's go ahead and move into Palantir because I know that's one that you want to hear about, all right? Palantir rejects claims of security flaws in Army platforms. So apparently one of their systems that they deployed for the US Army had some flaws in it. They rejected those claims and identified, the Army memo had identified significant problems with an early version of the system, and the system review process during the experimental phase functioned as designed, the spokesperson said for Palantir, okay? Now, this is like really, they're just trying to pull out any news that could send the stock down. Yes, okay, the software or whatever didn't work at first. That's why they're testing the software so they could work out all the kinks. So that doesn't affect their $100 million contract in any way. They already signed that contract, and there are going to be flaws with technology. Technology. That's why they are testing it. So for me, this is a buying opportunity. So Palantir went down about 7.47% today, and it's kind of trading right within this nice bull flag pattern. Okay, so I'm not really too much with trend lines. Like I don't really trade based off of those too much, but it's good to just kind of give you a reference point of, okay, where could the stock potentially bounce off from? So as we see right here, I mean, it could head down all the way to 165. The 50-day moving average is at 168. It kind of almost bounced off that. And then the lower Bollinger Band is at 158. So I think anywhere between 158 and 165 is a really, really good discount, considering that we are heading towards oversold on RSI. Again, MACD is looking a little bearish crossover right here. So maybe Monday or Tuesday, we could see continuous selling, which would be great opportunities for next week. So I'm going to show you exactly what I have on the table here. We're going to go to my Palantir position. You see that I have $99,000 worth of cash secured puts. And funny enough, I have them all at that 165 level, okay? I feel comfortable there. Again, if we go to the chart, 165 is right here, right on that trend line. So I like that. In fact, 158 would be even safer, okay, because that's lower Bollinger Band. The chances of it breaking the lower Bollinger Band are 5%. So usually when those outlier moves happen, like right here, the stock bounces back up, or right here, the stock bounces back up. So if it does do that, just be aware, that would be a buying opportunity in my opinion. So we can go out to the options chain. I'm not sure when earnings are, potentially November 7th. Okay, so we could go out to November 7th. I could go out there and just go ahead and do the 165s. I mean, that would be pretty aggressive. If I wanted to be safe, like I said, I would probably go to that 158 level. Great. I would go to the 157.5 right below that lower Bollinger Band, collect $735 for a 5% potential ROI. Okay, results vary based off where the stock's at, but I like that price. In fact, I may add some of these next week. So very, very good price there. And Palantir is a great one long term. And there's going to be some volatility. This is a healthy pullback that it needed to kind of, prime for that next leg up to 200, as I believe that's potentially where it's going to go by end of year. So that's a second stock. Okay, let's talk about SoFi. SoFi introduced options level 1 for investing for their investors on their platform. Okay, so this is great. They're introducing options trading. Level 1 is basically covered calls and cash secured puts, and level 2 was already available. So that's great. This is only going to expand their users on their platform because they already have a bunch of users with, maybe they have student loans, maybe they have mortgages, personal loans, banking, right? Now they're going to be able to trade options. SoFi is going to be kind of an all-in-one platform, which is needed to be competitive in this market, okay? This is how companies like this, small online banks, beat out the big banks, because some of those big banks don't have the best platforms for trading, right? Think of potentially like a Wells Fargo or something like that. So SoFi, great company, and has taken a massive hit, profit taking. I believe this is just all profit taking right here. You could tell because it's just so steep that we're basically almost oversold on this RSI area. We're trading at 42. Of course, oversold would technically be 30, but we're getting very close. And it looks like, as far as MACD goes, maybe 1 to 2 more days of selling before this thing kind of turns around. So I'm eyeing, actually on Monday, the 2450 area, okay? That's the lower Bollinger Band, and I would be playing this for leaps. I already have a massive cash secured put position. Today it kind of bounced off the 50-day moving average, but if we kind of break below, I'm looking at leaps, okay? Taking advantage of the fear here by buying that huge dip. So if we go to the portfolio, you could see that I have 186,000 worth of cash secured puts at 26.5 and 25. I'm okay getting a sign there. If we go back to the stock, okay, we'll go back to SoFi. There we go. 26.5 is about, it's definitely not the bottom, but it's about right here, okay? And I was selling these things when the stock was at 30. So I was okay getting a discount from all-time highs, which is about 12.5%, okay? So very bullish on SoFi. It already showed the potential of where it can go, $30. And I think by end of year, we could be somewhere between $32 and $34. So with that being said, okay, I'm going to take advantage of this fear. And if it does hit that lower Bollinger Band, I will be buying some leaps options. So I'm going to go out Jan 15, 2027, give myself ample amount of room to be right, and just ride these up. So I would probably go 70 delta, which would be, I don't know, let's just call it the 22 strike, which is a 73 delta. I'd pay $900 to control 100 shares versus $2,500 to control those 100 shares. So I really like that play. And I do think that the market will potentially head higher, and it will bring these stocks with it, okay? Now, let's kind of address the elephant in the room, okay? which is Robinhood. Right? Robinhood has had a massive run. It's hitting new all-time highs day after day after day after day. Even making me a little bit fearful of this stock, okay? But basically, they eye global expansion of prediction markets, okay, after their US debut. This is huge. Sports betting, prediction markets, NFL coming around, right? This is all huge. Now, I wanted to get a better picture of what is the total addressable market of all the expansion that they're doing. And even if they were to get a sliver of that total addressable market, you know, how high could this stock go? How high could the PE ratio go? So I basically did an analysis with ChatGPT, and basically this is where they're at, okay? PE currently is at 75. All-time highs 148, okay, on the stock. They're expanding into sports betting, which is a $100 billion market now. By 2030, 187 billion, okay? And even with a few percentage share of that total addressable market, that could translate into hundreds of millions in annual fees. Okay, so that's huge. And they're probably gonna have a majority stake of that total addressable market, being the most popular brokerage platform for young individuals, all right? Prediction markets, 1.5 billion to 16 billion plus by 2030. This is where people bet on, like, what is the weather going to be like tomorrow? Who's going to be the next president, right? There's so many different things that people could bet on, and that's a big market, and they will probably have a large slice of that pie, okay? Layer 2 in crypto. They haven't even launched their Layer 2 blockchain yet, which is going to be huge. That's a $1 trillion industry by 2030. So that's just one that's kind of under the radar that they are launching. Tokenized equities, $16 trillion by 2030. And Robinhood is positioning early to offer trading and custody, potentially capturing a slice of a massive new asset class. So again, Robinhood is going after innovation and future growth. So, you know, we'll just go over to this last one too, which is Robinhood Social. That one I know that business very well. They're tapping into a $277 billion ad spend industry. And even if they just offered high-end ads to financial companies only, or things that had to do with financial industry, that's huge, okay? That's very, very huge. So there's some potential PE scenarios in the next 1 to 2 years. The PE on this stock is most likely going to continue up, just like Palantir did when we were talking about it when it was trading at 200 PE. Now it's at 600, right? We are at the early stages of Robinhood. So potential PE scenarios is base case 90 to 100 within the next 1 to 2 years if Robinhood shows modest traction in new verticals. Bull case is 120 to 150. Okay, if the early tokenized asset monetization really grows. And then a stretch case would be 150 to 180. Obviously, it'd be very overvalued there. But again, it's not about what we think. It's about what all investors think as a collective. And, you know, we push these valuations up, right? So, you know, let's take a look at the chart, okay? Yes, I do think Robinhood could be a 100 PE ratio stock. It wouldn't be far-fetched to say that it could be there, okay? But I am playing it safer now, and I'm waiting for opportunities because just following my fundamentals, I don't want to be buying tops. I want to be getting discounts. So what I'm doing is I'm just waiting. Well, I actually rolled up the whole position, but I did very safely, okay? So we had the 120 puts, which is all the way down here, okay? And I basically got, you know, we were up on those quite a bit. You know, that's a 19% discount. And I said, you know what? I'm just going to roll up to the expected move in the next 3 weeks. Okay, so that's 127, which is still almost a 15% discount. So let me kind of walk you through what I did here. All right. Robinhood, 165K in cash secured puts. I love the company. It's just definitely overextended here. So what I did was I went out to the week before earnings, okay? We'll play earnings, but I went to the week before earnings and I looked at the expected move over here on the right. As you could see, if you're able to see it, it's plus or minus $21, okay? So $21 from here would be what, 127, okay? So I just went to that strike. Worst case scenario, the market makers are predicting a $21 move on the downside, that would be 127. So I went there. I sold this 127, which is a 17 delta, super low delta, for a quick 2% potential ROI. And, you know, I closed out my 120s that were the week before, and I closed those out at like 70% of premium, 60% of premium. So, you know, basically to collect some extra premium for the month, as you could see, an extra $3,272. Okay, so that's what we did there. I'm gonna wait for you know, for the markets to potentially roll over to bring this thing down, or just a potential sell-off of profit taking to really get aggressive here. But I do want to establish a more aggressive position. I just want to wait for a pullback here. So I wanted to address that and show you what are the potentials of Robinhood with all their expansion and innovation. So if you enjoyed this video, please give it a thumbs up, and I'll see you in the next one. Take care.